Copper continued its wild volatility this week, with prices crashing to the lowest point since December on Monday before staging a multi-day rally. The red metal faced heavy selling pressure after Chinese import data showed the world's largest consumer of copper was importing almost a quarter less of material than the previous year. Even the economy growing at an 18-month high and seasonal construction period arriving, demand has failed to spark the market, and base metals as a whole are depressed. Prices have recovered in the second half of the week, but analysts see the move as short covering, and the overall macroeconomic environment is still biased to the downside, with another price correction expected in the short term. In broader markets, a major political shakeup was prevented with the French election of Emmanuel Macron over Marine Le Pen. But it didn't take long for another earthquake in Washington, with President Donald Trump firing FBI Director James Comey on Tuesday. The political news has an effect on equity markets, but there is mounting concern that tax reform or infrastructure overhaul won't happen until 2018, especially with the continued distractions in the executive branch. Instead, Trump and his administration appear focused on adjusting trade agreements like NAFTA and finishing healthcare. Next week is rather light on the data and monetary side, but investors will continue to monitor the waves in Washington and hope a tax resolution appears sooner rather than later. I'm Don Barker for the Metal Bulletin Group in Chicago.